Hello traders, Gary Wagner here, approximately 10 o'clock in Honolulu, 4 o'clock in New York. It is Tuesday, the 30th day of October, 2012, and this is the daily report for gold and silver. Once again, our hearts and prayers go out to all of those on the East Coast that have been affected by this superstorm, Sandy, this hurricane which hit land yesterday and really devastated a large part of the mainland USA in terms of power outages. From what I have heard, we're looking at about 6 million people without electricity today. So once again, hearts and prayers out to them. In lieu of that, we have an extremely quiet market as expected, in essence unchanged. As you can see, current print on the board, call it 1710. That is your bid. Your ask is 1711. Puts it up about 20 cents on the day. The high 1716 and the low 1707.40. Now, silver is basically unchanged to up about a nickel, just flirting with $32 an ounce. We're looking at the bid. As you can see, 31.81, 31.91 is the ask. So just below that $32 mark. And as you can see, we have been talking about, especially in silver over the last couple of days, actually week, so to speak, that this one level, we really want to see this hold. This is 31.47. Of course, our stop is just below that. You can see that it has been trading within the lows or the confines of this 31, call it 47. And in terms of the upper end of the range, you're looking at about 32.41. So about a $1 range, as you can see right in here. This is pretty much what we have seen in silver as it trades within this range. Now, Friday, there hopefully will be a jobs report. We're still uncertain whether or not the Labor Department can actually pull it together with all the devastation that has taken place, but we will see. In terms of outside market influences this morning, you do have a lower dollar and higher crude oil prices. Now traders, what I've done on this chart, and this of course is silver, very, very short term, 240-minute continuous contract of silver. And we talked about this a little bit on Friday, a little bit yesterday, but I do want to continue along these lines. And that is when we look at this defined range, here's 31.47. As I say, this is the lower end of the range right here. You've got lows just above that. Upper end of the range, 32.41. And what is clear to me is, unlike previous times within this market when it's got a defined downtrend, solid red candles on the Henkin chart, defined uptrend, solid green candles, and so forth, you can really see that there's a primary change that's going on. You can see that congestion right in here as the market trades sideways. And absolutely, right at this point, you have the market trading sideways. Well, we've got a defined range of about $1. That's the first thing. It's been going on, call it since the latter part of October, right in here. As we go into the beginning of November, of course, that will be on Thursday of this week, the first day of November. We have the 31st coming up tomorrow. But if you look at this market now, you've got defined down here, and then you get a couple of green, goes back to red, to green, to red, to green, to red, to green, to red. That oscillation that you're seeing right in here is indicative of a sideways market. I would look for silver kind of to trade within that pattern. Of course, we have the election coming up next week, and there's a lot of speculation about how gold and silver will fare depending on who is elected. Traders, on today's show, I wanted to spend a few moments talking about a potential pattern that we are currently seeing in the market, simply called a cup and handle. I'm going to take a look at our weekly chart to show this example and try to illustrate it as best I can. On a cup and handle, in essence, what you get is you first get your cup, which would be something like this, right in here. This would be considered the cup. And then what you get within that cup is a significant top. That's, of course, this top right here. And what typically happens on a cup and handle is the market will come up, it will reach this particular peak, come back down as we're seeing here, and the handle will be something like this. This is your handle of the cup. Now, in theory, you're looking to see if the cup breaks above this particular point, meaning our resistance area. And that appears to be what we have a high possibility of forming. Let me bring a chart over, and this is a chart that really shows you that cup and handle, and you can see a couple of significant points, of course. This area right in here, this is our breakout point, and for that we would look at this area right in here, of course, this top right in here. You can see how the market has actually come up, it's tested this particular area, and is now really moving into the handle. And once again, your handle is going to be something like this. It's going to hit your low, and then it's going to start to move back up. This is the handle of the cup. And of course, the belief is if it breaks above here, as you see right in here, you get that breakout, and that breakout, of course, would be to the upside. And that's your basic cup and handle pattern. Now, whether or not we will see this market execute in that way and unfold in that way is something only time will tell. But I think the traders, you can see that there is a significant correlation between this standard pattern that we're looking at and the current formation that we're seeing in gold. We absolutely, without a shadow of a doubt, have our cup right here. There's no doubt about that. Handle, well, it really is forming that handle. So it's a matter if we see this market break out to the upside. That, of course, would take us back to this three-tiered top, this triple top that we have in gold. And of course, a breakout above this point here would be very significant, because that would signal that not only has it finally overcome this 1800, this resistance area here, but this breakout, in fact, could push the market higher, as you can see on this example, in which we could see it go back and make a stab for the recent record highs. Now, I don't think it will take out the record high, certainly not on the first try, and we certainly have to see this market move another $100 before this handle is fully formed. But you can see, there can be no doubt, there are some similarities within the pattern itself and the way gold prices are unfolding. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.